Welcome everybody to yet another webinar with your host Munther Marji CMT, hosted by, of course, FX Educast and our favorite broker in the whole world, QTime FX. How are you guys? How's everybody doing? I hope you are doing great. I hope you are ready for some fishing for the best trading opportunities in the market. So are you? Let me know if you are so we can start this. Hi, how are you doing, guys? I really hope that you are ready because we have the goods today. We are going to take a look at the market. We are going to look for the best opportunities there, and we are going to find them just for you and trade them in front of you. That is, of course, after I just want to set up the chat, guys, so I can see what you guys are talking about. If you have any questions, any requests. So this is it. Okay. All right, guys, so now the chat is working. Fantastic. We are ready. Let's go. And immediately, without wasting any time, we are going immediately to the charts to talk about today's chart. Okay. Of course, we're going to start with the euro, as usual. And yeah, let's go. Let us go. Okay, guys. So now everything is ready. We are ready to go, and we are starting with the euro. The euro. What is happening on that front? Everybody, of course, is thinking about the $1.10 landmark. It's an important level, of course, and whenever you talk to traders these days, they are asking the same question, or at least discussing the same topic. Are we going to survive above $1.10 or not? What is going to happen to the euro? Is it going to parity, or is it going to 120? So the next 1,000 pips, are they to the upside or to the downside? That is what everybody is thinking about. You know, recently, of course, let me use this chart to show you what I'm talking about. Recently, guys, of course, the direction, if you want to talk about the medium term, the short term, I don't want to use the daily. As you can see, guys, there is no question about the direction that the euro took from the high seen early in 2018, and we are approaching, of course, the end of 2019. So we're talking about more than a year and a half of a downtrend. Is that enough? This is the question. Of course, one of the simplest techniques that you can use to identify the trend over a period of time, over a previous period of time, is comparing the price at the beginning of the chart with the price at the end of the chart, or towards the end of the chart. So by doing so, you can take a look at where we were in February of 2018 and then in October of 2019, and the difference is obvious, of course. We have been moving steadily, but very slowly. Most of the time it was a slow move to the downside, especially in the last part of the chart. You see, we took months and months to drop 300 pips, 400 pips. It took months to achieve that, not weeks. But some parts of the drop were very sharp, like this one, for example, sometimes like this one. But recently, yes, it was steady. The drop was steady since June. I've been dropping, but not in a very sharp way. And as you can see, fluctuations down the way, even after such a drop like this one, we had moved to the upside again. A little bit of a strong drop here, again to the upside, and so on, up until this point. So now the question is, of course, is this here, the low that we have seen early in October, on the first day of the month of October, is it the end of this almost 20 months, I think? Yeah, almost 20 months of a downtrend? This is the most important question that everybody is thinking about right now. A lot of people, of course, believe that this is a very good downtrend. It's going to continue digging deeper until further notice, and we have not seen a break that convince these people that the price is going to recover. If we draw a trend line, this is a very good trend line in my own opinion. We can see that the euro is trying to break above this trend line. And it did try, especially with the high seen on October 18th, 2-month high at 1183. It was a very good attempt to break to the upside, but unfortunately we did not move 1 pip above the high of that day since then. So for 40 days or so, we have been trading below that high. So that is the reason why some people said, what if we draw this trend line like this? Would it make sense? As you can see, the touch here, the touch here, the touch here are, the first two are exact. Of course, this is very, very close to the trend line. Here we have a very, very close to the trend line. And then again, we have an exact touch here. And if we do that, you, or at least these people, say that they have an evidence that the euro is not recovering well. And if you take a look at the daily chart, you can see that this trend line is currently running just above the 111 landmark, around 111, 10, 15, something like that. Okay, so to convince these people that it is an attempt to recover that deserves our attention, we need to break above this trend line. And if we draw the trend line like we did previously with this touch here, I'm gonna change the color. We can see that even when we draw the trend line like this, we are trading below it, which is not very good news. So this trend line, the one that we have been looking at for months right now, is currently running around 1050, and this is why this is an important resistance for the time being. And of course we have the 11, let's say 15. Let's say 11.15. These are the two levels that are important for the medium-term view. So we need to break above these levels before everybody is convinced that the euro is moving to the upside. Some people say, well, it is a downtrend. It has been moving to the downside for a long time, and we need to see a stronger proof that the euro is recovering. How about this one, guys? How about the move from here? Let me focus on the chart for a minute to make this extremely clear for you. This move, this is a very good attempt to recover, but to a lot of people, it is not enough. And if we draw these, the retracement levels, we can see that it fell short only around 25 pips before reaching the 61.8 retracement level for the whole drop from June top. So even if we traded above a trend line here, we did not do enough to push beyond 61.8 retracement level. So all this negativity is justified. A lot of people that I talk to say the euro is going down. And of course, a lot of people that I talk to say it's going up. So now we have two different opinions, and everybody is defending their own opinion. Euro bulls and Euro bears are both very interested in what is happening right now. Me too. I don't know if we are going to get something very exciting before Christmas, or if the excitement is going to be saved until early 2020 or 2020. It's a very nice number. Next year is going to be exciting. I really hope so. The number itself in the year is very good looking, and we are looking to see good trading opportunities, but we want to see proof. We want to see things on the chart that strongly support one direction or the other. I'm a Eurobull, you know that, for several reasons. My bullishness started with this move to the upside. I loved this, and when I was drawing the trend line like this, I saw the price above the trend line. I felt very good about that. But then again, when we failed and were unable to overcome this high, I started worrying, of course. However, up until now, the movement to the downside seems corrective. You know, this looks absolutely corrective in every way you look at it. It's an ABC and Elliott ABC, and now that we have overlapping for this first wave here, we cannot count it as 1, 2, 3, 4, 5. We cannot do that because the price did trade above the bottom of the first wave, which is 1073. Another reason why we believe that the euro has a chance and should use this chance is the fact that this ABC stopped exactly where it should. Our most important support for the past few weeks was 109.95, and we stopped extremely close to 109.95 and started recovering again, which gave us hope that the euro is going to do it this time. However, again, we were frustrated by failure of the bulls to push beyond certain resistance levels. This was a huge setback for me, you know, just touching this trend line, this black trend line, and then falling again. This was not good at all. The problem is that we have now we do have a number of days that appear as red candles on the daily chart, which is not really encouraging. However, we still have a chance, and in my own opinion, we will continue to have a chance as long as 109.95 is not broken, or if we want to be exact, we can use this low, which is only a few pips below 109.95. It is 109.89, and that is the support I'm going to go with for the time being. This low here, November 14th low, 109.89. Okay, guys? So the first thing that I want you to know about the market for today, for the time being, for this week, is that 109.89 can decide a lot of things. As long as we are trading above this support, there is a chance for the euro to recover, to achieve more gains, maybe more gains than it did here. We are ready, if of course, if we hold above 109.95 or 109.89, they are 6 pips apart, so you can consider them as one area. If we continue to hold above this support, this key support, then trading above 1183 will become highly, highly probable. But I want to see the bulls in action. Up until now, the bulls are not doing anything impressive. I'm sorry, they are not. The last impressive thing they did was this jump up from 109.95. We tested 109.95 almost 2 weeks ago, and then we started recovering. And that was very impressive. But as you can see on the chart, it was a couple of days, couple of green days, but after that, weakness started to appear. So guys, the first piece of information that you can use for today is this. Support is at 109.89. As long as we are trading above the support, we are going to have a real chance. But once we start trading below the support, then we need to cool our enthusiasm down. Because when we break such an important support, usually a continuation of the drop will happen, will take place. Two reasons why this support is very important. It's the bottom of an ABC, probable ABC pattern. That is, of course, corrective. If you are an electrician, you know how important the ABC correction is, because usually after an ABC correction, the trend is resumed in the direction it had before this ABC piece. This is the ABC piece. I'm talking about the three-wave sequence here. Before that, we were rising. We did rise more than 300 pips. Now, after the termination of this ABC, we should continue to do the same thing. We achieved more than 300 pips in gains for the euro here. Now we should do the same thing. And this, of course, is the view that I still hold very dearly, but of course with condition. 109.89. Let's use this one, not 95. The 89, I'm going to show you why 89, not 95, is the support to watch. Of course, they are very close to each other. So it's not a lot of difference to the outlook. They are 6 pips apart. But it is important now to hold above 109.89, not 95. Why is that? Let me show you. This is the wave count that I'm going by right now. And it depends, it really depends on not going below 109.89. Let's go back to November 14th low. Exactly 12 days ago, we saw this low 109.88. It was a test of the very important support 109.95. Here it is. As you can see, we have, of course, spotted this support way before it was tested. When we were trading above 111, we said that 109.95. If you have watched my videos or read my reports, you would see that 109.95 was talked about way before it was tested, and it was introduced to you as the single most important support for the short term. And when it survived with this unbelievable accuracy, I felt like this is, a victory for me personally. I felt very good about my analysis, but this is not the important thing, of course. We can have a good view of the market without achieving any kind of profit, or we can accompany that with profit. And this is what I'm trying to do right here. So without achieving profit for the recovery from 109.95, this test, which took place 12 days ago, without making that or turning that into pips and profit, that means nothing. And up until now, we are still waiting for that to happen. So this is the bottom from which this very bullish wave count started. We have 5 waves to the upside, as you can see. And inside these 5 waves, wave 3 is also divided into 5, which is, of course, another confirmation that this wave count is valid, and it has a good chance of being the right wave count, because there is always more than one wave count when you're talking about the Elliott wave. You know that saying, put 10 Elliotticians in one room and give them one chart and they will come back to you with 11 wave counts. You know that? So There is always an alternate wave count, at least one, sometimes many. But we use guidelines of the wave principle in order to see and judge for ourselves if our wave count meets a lot of guidelines. That means it does have a good chance of being the right wave count. If it does not meet a lot of guidelines, then it probably will end up being thrown out the window, and we will use another wave count. So one of the guidelines, of course, is that wave 3 is usually the largest. As you can see on the chart, wave 3 is the largest between the 5 waves here inside the wave, 5-wave sequence. And inside wave 3, we do have 5 waves to the upside. And this is very important, guys. On the hourly chart, this wave 2 may not be very obvious like it is the case as you can see here, but when you go to the 15 5-minute charts, it is obvious that this is wave 2. Then we have wave 3, of course, wave 4, maybe here. We can use this or this, and honestly, I prefer this as the end point of wave 4. This makes it a flat correction. Let me show you what I'm talking about. This is what we call a flat correction, where all 3 waves, A, B, and C, tend to be equal in size. And as you can see, this is exactly the case here. A and C are terminating very close to each other. Another evidence that this wave count is correct. And of course, after this ABC, we saw a move to the upside. That was, of course, expected, terminating this 5-wave sequence inside wave 3. And another guideline that is met here is that after a flat wave 4, a thrust, a fast and short-lived move to the upside takes place as wave 5, and that is also met here. So we have many guidelines that are met in this wave count. And of course, wave 4 of the whole 5-wave sequence, not wave 4 inside wave 3 like here, terminates here, and then we have wave 5 to the upside, maybe an ending diagonal, because we have overlapping between the waves. We can have that in the last wave of the 5-wave sequence. We call it ending diagonal. That's not an odd thing. That is something that happens in the wave principle. And then, of course, we started falling down. A, B, and C. And one of the things about this correction, the first thing I want you to notice, is that the bottom of wave A is very close to the bottom of wave 4. Another one of the most important guidelines of the wave principle met. So just by looking at the proximity between this low here and this low here, and seeing that they are very close to each other, we can have another reason to believe in this wave count. Wave A usually terminates around the bottom of wave 4, or sometimes the whole correction terminates around the bottom of wave 4. In this case, it was wave A, one of the guidelines of the wave principle met, another one met. After this, of course, we had a B wave to the upside, and then we started falling again. Inside wave C, we can also count 5 waves. As you can see, 1, 2, 3, 4, and 5. And 1 and 4 are not overlapping. 3 is the largest in the 5-wave sequence. Everything looks perfect from a wave count perspective. And this happening, guys, also very close to the bottom of wave 2. As you can see, wave 2 is around 1013. I think we got to 1002, only 11 pips below it, and very close to the 88.6 retracement level for the whole 5-wave sequence. As you can read on the chart, this is one of the notes I left here, having the bottom of wave A very close to the bottom of wave 4, and the bottom of wave C very close to the bottom of both wave 2 and the 88.6% retracement. add confidence to an already bullish wave count. So with the termination of these 5 waves here, the 5-wave sequence inside wave C, we came to the end of the whole correction from this point here, 1097. 1, 2, 3, 3 waves. Inside them, wave C is clearly divided into 5, exactly as it should. And one more thing, guys. One more thing. When you take a look at the wave C itself, forget about everything. Wave C is a third wave, of course, so it should look like wave 3. How in which way? In the size and the speed. If it was to the downside, in the scare that it leaves behind. If it was to the upside, in the excitement it leaves behind. So as you can see, wave 3 here was exciting. It was pushing up, very, very good. Now wave C should scare the bulls. And yeah, it should look scary. So when we were trading very close to 111 here at the beginning of wave C, we were feeling very good about the bullish expectations. Now with this drop, especially this part, wave 3, we felt scared, of course, and then we tried to recover in wave 4. Of course, wave 4 recovery should always be limited, very small, before a final wave 5 to the downside. And this is exactly what happened. And with reaching levels like 110 or getting close to the 110 and the support at 109.95 and now the 109.89, of course it was scary. Exactly like wave C should be. It should scare people. So without scaring people, wave C will not be itself. As a bull, of course, when I saw the price getting closer and closer to 110, I started feeling worried. And that is exactly what wave C should do. So we have a very bullish wave count here, very good one, with one condition, of course, to hold above 109.89. When you count the waves, I hope we have many eliticians with us right now. When you count the waves, guys, you always need, of course, if you are an elitician, you know that, you always need a level that, if broken or penetrated with a good number of pips, leaves this wave count void. So you can throw this wave count, this is a beautiful wave count, but you can throw it out the window once we start trading below 109.89. And to me, I wouldn't do that at the first few pips. I would give 108.89 some room to do its magic. So even if, yes, from a pure elitician point of view, any trading below 109.89 should mean that this wave count is done. But even Robert Prechter himself, probably the second man in command in the world of Elliott Wave after Elliott himself, he said that in leveraged markets, sometimes overlapping happens between 1 and 4. And with the same concept, we can take it and apply it to corrections and 5-wave sequences. So of course we don't want ABC to go below the 1, 2, 3, 4, 5, the bottom of the 1, 2, 3, 4, 5. But if that happens in a leveraged market with a limited number of pips, we'll let it pass. So what I need you to do now is 109.88. This is our support. If we start trading below that with a couple of pips, 3, 4 pips, 5 pips, that's not a problem. But if we start trading below it, something like 20 pips, we need to give up on this bullish wave count immediately. Okay, so the first piece of information I'm gonna leave on the chart here is that support is at 109.88. Fantastic. So now we do have our first level, which we can use to build a trading strategy on. Now, what about the resistance? Of course, can we draw a trend line that is falling from the top of wave C? It will not be a good trend line because it is already broken. It will not help us at all. But we do have these moving average averages here. The area between the 35 and 49 looks very interesting to me. And as you can see, the top of this moving average band is extremely close to yesterday high, 1025. And that's why I'm using 1025 as my resistance. It is, first of all, yesterday high. And again, it is the top of the moving average band that I use every day to determine if the trend is up or down. As long as we are, you know me, as long as we are below the moving average band, then the trend is down. So as you can see here, we penetrated it and we tried to recover above it. We failed, so we continue to be below it. Failure here, this failure by itself is a weakness sign because it happened very, very close to the moving average band. And that by itself, of course, showed that the euro is going down. Now, if we break above this moving average band, that will change. So as long as we do not break above it, the euro will be expected to move lower. But if we break above yesterday high, we want to be in on the long side of the market. So with these two levels, here we can start building our trading strategy. Okay, so when we have support and resistance this close to each other, they are very close to each other, around 40 pips, that's very good. We can build a trading strategy in which if the support is broken, we sell. If the resistance is broken, we buy. And the stop for each entry point is the entry in the other direction. I'm sure if you are a viewer of my webinars, if you have seen this before, you know that I do this a lot when the support and resistance are close to each other. So we can buy if we start trading above 1025. 10 pips is enough, so 1035, in my own opinion, is a good entry on the long side of the market. Now, the support is at 109.88. I want to place my stop something like 20 pips, maybe 20. Let's see if we place it at 20 pips below that, 109.68. Yeah, that makes perfect sense to me. And you know what? Because I'm very excited about the bullish possibility, I will jump in on the long side of the market, not 10 pips above the resistance, but only 5 pips. Once we start trading above yesterday high 1025, then get in, guys. Get in on the long side of the market and hope for the best. So this is very good. 62 pips of stop, that is fantastic. That is within the range that we consider ideal, which is between 60 and 70 pips. I love that. This is a good start for the day. Now, what about the targets? Target 1, the small one, and target 2, the more ambitious. Target 1 for you guys who want to be in and out within a few hours, or by the end of the day maximum. Okay, let's see. The top of this recovery attempt here took place on Thursday. I think it was Thursday high. It was 70, so 109.70. Or we can expect the price to push a little bit beyond this top if it's serious about recovering, of course. And how about 10 pips above that? Sorry, not 9 here. 10. 1080. Yeah, 50 pips maximum. Maybe 40 if you want to place it at 40. It's okay. For me, I'm going to place it here at 1080. Okay. Now, the second target is, of course, the top that we have been waiting for to be retested for more than a whole month. The high seen on October 18th at 1183, which was a 2-month high at that time. So this is the buy recommendation for today, guys. In blue, of course, you know the color code by now. And what about the sell? The sell, of course, is exactly the opposite to this signal. We enter the market at 109.68 with a stop at 10.30. 10.30 sounds like a time more than a price, but it's the price that we are using today. Again, 62 pips, of course, the same thing. Now, what about the limits? Target 1. I'm sure you remember from last week, we talked a lot about 109.03 as the next important support after 109.95. So if we start trading with a good number of pips below the 109.95 or 109.88 if you want, we can expect the market to drop towards 109.03, 65 pips of profit. That's very good. And target number 2, we have the long-term Fibonacci 78.6 retracement level at 108.14. So these are the recommendations for today. As you can see, guys, the targets for the downside are exactly the same that we have been using recently, because these are the important levels to the downside. We do not have more important levels, or we do not have any change for the targets. Target 1 has been the same for more than a week. It's 109.03. Target 2 has been the same for more than a week. It's 108.14. On the upside, target 2 is always 11.83, or sometimes we use 12.09 to be honest. Target 1 keeps changing depending on where we are trading, and that is, of course, today it is at 10.80. This makes perfect sense in my opinion. The stop is reasonable. The initial targets are good, and let's hope for the best. So let's go to our QTimeFX, my live account there, guys. I'm gonna buy stop at 10.30. I'm gonna place the order now. You can copy this order. You can take a screenshot of the order. You can go immediately to your QTimeFX live account and place your order there. And we really want you to be with us, guys. That's why we are giving you these trading recommendations free of charge. Of course, they are not free, you know that. To get someone who has been trading for 19 years in the market with a CMT designation to do your analysis for you, that's not free. So why is it free? Because QTimeFX loves you so much and wants you to see the best opportunities in the market. And that's why they are paying me on your behalf. That's very generous of them. So thank you, QTimeFX, for your generous sponsorship of these webinars. And this is all for you guys. Stop is 109.68. And as we said before, 10.80. And boom. So this is the order. It's placed right now. Buy at 10.30, stop loss 9.68, limit 10.80. What about the sell recommendation? I'm going to place that, of course. I prefer, guys, of course, I prefer the long side of the market. But I'm a reasonable man. I'm not married to directions in the market, and neither you should. Never, ever commit yourself to a direction in the market that, regardless of what the chart is showing to you, you will continue to believe in it. Do not do that to yourself, okay? I'm a bull. I love the euro. I really think it has a very good chance of recovering to the upside. But hey, if it does not, it does not. And that is why if we break below 109.88, I'm going to stop calling the euro a good opportunity to buy. I'm going to leave that sinking boat and jump on the winner's boat, which is going to be probably to the downside. Once we break 109.88, my opinion will change from longs make you profit to shorts make you profit. And that is why I'm placing this order in front of you. We are going to sell if the price gets to 109.68 with a stop at 10.30 and a limit at what looks like an important support at 109.03 and place. And here it is, guys. The order is now there. It is in my account. Sell at 109.68, stop 10.30, and take profit at 109.03. Okay, guys, so with this, we come to the end of the first hour. We still have more. I'm going to take a short break. We always spend the most, sometimes all of the first hour on our beloved euro, or at least, guys, your beloved euro, because you guys love it much more than I do. I like the euro. I follow it, of course, all the time. But recently, it has been boring compared to other instruments like gold, for example, where the action is larger moves, as usual, of course, more excitement and more opportunities. So for you guys, I'm sure I know a lot of traders. The first thing they ask about is the euro dollar. They want to know where it's going. So that's why we spend almost an hour talking about it. In the next couple of hours, we're going to talk about other instruments. So if you guys have any market that you are interested in, please let me know about it, and I will do my best. If I have a chart for it, I'm gonna analyze it with a smile on my face, and I'm gonna get back to you with the most important support and resistance levels, where to get in if we want to buy or sell at any pair, any instrument that you are interested in. I will be very happy to do that. But of course, after the break. So now we are going to take a break of 5 minutes, 5, 6, 7 minutes, something like that. And before I go, I want to remind you guys that this live stream is sponsored by our favorite forex broker in the whole world, QTime FX, who is offering you a leverage of up to 500 to 1 and was awarded the award for the lowest forex spread broker of 2018, and I really hope they get it again in 2019 and again in 2020 and every year, because they deserve it, guys. They are offering you fantastically tight spreads. Fantastic. Look at these spreads on the screen, guys. Euro, dollar at 0.4 of a pip, dollar yen at 0.4 of a pip, and similar very attractive spreads for all other instruments. So what are you waiting for? Open your account, trade with these very tight spreads with a broker that you can trust, because client funds are segregated in UOB, which is ranked in the 22nd place in the World Bank ranking. That is very good, guys, for your funds. So you feel safe, you feel secure. And if the very tight spread is not good enough for you, if the option to trade with no commission at all is not good for you, if segregated funds is not good for you, then take a look at this bonus, guys. Open a VIP account with QTime FX with $150 minimum deposit and get up to $500 of free bonus, guys. This is not a trading credit. This is actual money, real green American money. Okay, make a deposit of $300 and get a bonus of $500, or make a deposit of $150 and get a bonus of $250. Of course, we have a number of lots that you need to trade before you can withdraw, and you can withdraw $1.50 for each lot you trade. So you accumulate your lots, and then you say, guys, I want to draw the bonus, and we say, congrats, good, go enjoy it. Here's your money, withdraw it, enjoy it, spend it on whatever you want. You want to buy a technological gadget, you want to go to take the missus to a fancy restaurant, whatever you want to do with your $250 or $500, go ahead and do it. We want you to be successful, guys. QTime FX and FX Educast, and of course your host Munther Marji, we all want you to be successful. That's why we are offering you these fantastic trading conditions. So what are you waiting for? Contact us at FX_Educast via Telegram, and let's open a real account for you. Of course, to give these promotional benefits, you must contact FX_Educast via Telegram. If you don't go through us, if you don't contact us on Telegram, we cannot be 100% certain that you are getting these fantastic spreads and bonus, of course. But when you do, we assure you that this fantastic promotional offer is yours 100%. So with this, guys, it is the end of the first hour. I'm going to take a short break and I'm going to go back or come back actually after a few minutes. Get yourself something to drink. Think about what markets you want me to analyze for you, and I will see you in 5. Okay, guys, we are back after the short break. Welcome back. If you have just joined us, I'm very happy to have you with us. If you have been watching the first hour, as you saw, of course, we talked about the euro. We identified exactly where we should buy, where we should sell the euro for today. And it is time to talk about other instrument, of course. So let's do that. Okay, this is the recommendation for the euro for today. The recommendations, there are two, now one. We have a recommendation to buy at 10.30, a recommendation to sell at 9.68. Good luck with that, guys. Now let us move to the second instrument in today's analysis, and that would be gold. Gold has dropped more than it should recently, actually. I'm going to show you, I'm going to start with the view we had, and I'm going to see if we need to give up on that. So guys, of course, we were expecting gold to drop up until it reached the 40s. We identified this low with unbelievable accuracy. It was a great victory for our analysis. Of course, it terminated very close to the Fibonacci 38.2 retracement level for the whole move up from April bottom after a double 3 kind of movement. And we had the wave count inside the last part of the drop to indicate that this drop is now done. And of course, when the price started recovering from that, I was the happiest man in the world. The analysis was great. The trades were making money, and I was very happy. But unfortunately, that changed in the past few days because, yeah, of course, after recovering from the 40s to the upper 70s, we expect gold to drop a little bit. But the question, the very important question now is this. Did gold drop too much, or did it drop something that we can tolerate? And for that, we need to go to a shorter term. I'm going to remove all drawing tools, so we start from scratch. As you can see, guys, the size of the drop is not small at all, compared, of course, to the previous recovery attempt. So we recovered from around 46 to around 78, 79, something like that. And then we started dropping. And it was, in my own opinion, I really believed that 61.8 would save gold because it's very close to this bottom right here, and it's the most important Fibonacci level. So I said to myself, this will be the end of this drop. But unfortunately, up until now, no, that's not what is happening. If we draw a trend line from the top here, we can draw another trend line, maybe like this. However we draw it, it is not providing enough support, in my own opinion, for the precious metal. Let's try like this. Not a lot of support is offered here. First thing I want to take a look at is which retracement level we are trading at the moment. 78.6, not bad at all. 88.6, also not bad. So we have tested 78.6 at 52.63. I think that happened overnight, right? Yes, during the agent session overnight. I'm talking about my own my own time zone, but for you guys it's maybe in the afternoon or in the morning or at any time of the day, depending on where you are, of course. So to me, this happened overnight. I was sleeping when 78.6 was tested. If I was there, I would attempt to buy here, but of course I was sleeping, so I did not. No trades made here. Now, as you can see, we are approaching the moving average band. We need to break above this band. So in order to say, yes, guys, we did find support at 78.6 retracement level. This kind of price behavior is not acceptable. Now, we are getting very close to the moving average band, and then we are failing to break above it. We need to break above the top of this band, and the sooner the better. The top of this band is not here. No, it's below. Currently, it is closer to this low here, the low seen right after the market open, intraday low before this recovery attempt, this very small recovery attempt. It was 59.30. So of course this is a falling band, and it will get to 59.30 very soon. It is at 59.90. So we need 6 pips below this top in order to make the top of the moving average band equal to this intraday low here, and I'm going to use this intraday low as my resistance for the day. So it is, sorry, 59.30. Okay. Now what about the support? Of course, we showed that 52.60 can be a support, because as you can see, after getting tested, we moved higher up until now about 40 pips, and we are still trying to get beyond that. But I would use, you know, not this one, not 1449. I would use the long-term Fibonacci level at 46.1. So support. And as you can see, guys, we already have a problem for trading gold today. And the problem, of course, is that the difference between support and resistance is more than 100 pips, and that would leave us with a stop of more than 150 pips if we want to build a trading strategy using these levels. 132 pips exactly between the two levels. So if we place the stop and the entry 10 pips beyond these levels, that means we are going to end up with a stop of 152 pips, and that's very hard to do. You know, that's a lot of a stop. I'm not going to use that. So we are going to look for closer levels to build our trading strategy on for today, but I really want you to keep these numbers in mind. So we have a support at 1446.1. It's the Fibonacci level, or if you want to use the actual bottom, which is only 6 pips below that, just like in the case of the euro, it's 45.50. We can use that. I'm going to change that, only 6 pips to the downside, 45.50. These are important support and resistance levels, especially the support, because it has been tested before. It is the beginning of a really remarkable recovery attempt, and to keep the bullish count alive, we need to keep trading above that bottom. We could draw a trend line like this to help us estimate the chances of moving higher or lower. As long as we are trading above this trend line, I don't think that the bears can really control this market, but an indication that they are trying very hard to do so would be trading below this rising trend line, which is at 14. Currently, let's say it's 14.55. Maybe we can use this bottom right here, 55.2. So I'm going to use that. I'm going to use that. I'm going to call it initial support. So with having this support here closer to the resistance, now we can use these numbers to, of course, build a trading strategy. So if we start trading above 59.3, a long position would become justified. And of course, if we start trading below 1452, 55.2, a short will become justified. So buy, let's say 10 pips above 1459.3, 1460.3. But because it's a psychological level, I'm gonna place it exactly at 60. Once we get in the 60s, that's it. I think the market will feel better about the precious metal and things will start to get better, but not before that. I really do not recommend, guys, buying gold before we get into the 60s, and just the first pips into the 60s are enough, in my opinion. But before that, no. Why am I saying that? Because as you can see, we have approached the moving average band and we are starting to fall. This is not a sign of strength. So I do not recommend going long on gold here. Now we have this rising trend line at 55.2, and we also have this intraday low, which looks very interesting at 55.9. As you can see, they are very close to each other. So I'm gonna, of course, use this initial support to place my stop below, but with a good number of pips, not 10 pips. I'm gonna this is gold, so I'm gonna increase that to, how about 25? 20 or maybe 30 pips. Let's see, 52.2, that leaves us with 78 pips of a stop loss. That's fine by me. Now about the targets. Initial target for a long at 60 should be a high retracement. Maybe we can use high retracements of this drop. For example, let's see where the 61.8 is, and 61.8 at 68.4. Not bad. 68.4, not bad at all. But for a second target, of course, we are going to go well beyond that, and we're going to look for a target that makes sense in case the market starts to really recover. For me, this top here, of course, it's important, but I remember that we have a retracement level a few pips above it at 80.8, and that is going to be my second target, 80.8. It makes sense. The numbers are good. The stop is reasonable. So this is our buy recommendation for gold right now. Now for the sell recommendation, I'm not sure if I can use 55.2 to sell below. Why is that? Because we do have a very important support at 1445. We can sell, but we should not be expecting much unless, of course, 1445.5 gives way. So I'm gonna still build a trading strategy just like this, but I am going to keep my initial target limited to areas that are close to 45.5 or just above it. So guys, what I want to say about gold here is this, guys. I want you to take a look at this chart. As you can see, of course, we are aiming, of course, if we start trading below this trend line, we are aiming to retest this low here. And that should be our initial target, but we should have another target. And in this case, it might be really, really far. Let's see. That is a lot. Of course, we're not going to use F1411. That is way, way far. But how about a support or previous support, previous resistance that is between 38.2 and the 50%? I like this area here with this close. This close is at 23.6. This high is 24.6. How about that? What do you think? That is too much, but I'm going to use it anyway. Okay, guys. So you see currently gold is recovering from the 40s. This is a good recovery, at least it was a good recovery attempt until the past few days when the market started falling again. We need to keep trading above that low. If we can, gold can recover for hundreds of pips to the upside. But once that low gives way, then we need to completely forget about the recovery possibility, because that means, of course, we can start targeting lower retracement levels on the long run, and they are not very close. As you can see, they are not close at all. 1411 is the 50%, 1377 is 61.8. And they are both going to become candidates for targets of the drop in case we start trading below this Fibonacci level, and of course the low, this low that has been seen exactly 2 weeks ago. So these are the recommendations for today, guys. You can place them on your trading account. You can copy them. You can do whatever you want with them. Buy at 1460, stop at 1452.2, or sell at 1452.2 and with the stop at 1460. The targets, which targets am I going to use? Well, I'm going to use the initial target for the short, but the second target for the long. Let's go ahead and place those. Of course, I'm using my live account at QTimeFX to place these orders. It's not a limit, it's a stop. Buy stop at 1460. Where did we say? 52.2 is our stop. And the take profit here is going to be 80.8. Okay. And place. As you can see, but before I press place, I want you to notice that I have used the second target. Okay, I'm not placing my limit at 68.4. I'm hoping for a very good market reaction if we can overcome the moving average band on the hourly chart, and that would leave us not only looking to be trading in the 60s, but to attempt and reach the first retracement level that we care about, which is 80.8, and place. Of course, guys, as you can see, what we are going to place here is for the sell signal, of course, it's going to be the initial target, this one, not this one. Why? Because we can absolutely find support at this low here. So we don't want to short at 52.2, see the market drop to the 40s and then start recovering and then end up with a stop head. So if we sell at 52.2, we get 45.5, we close our trade. We don't want to wait for the second target. Okay, guys, capiche? So this is the order that I'm going with right now. And as you can see, we have placed a sell at 52.2, stop loss at 1460 with a limit at 45.5. And this is it for gold, guys. Now we do have, of course, as you can see, we have the euro, we have gold, and I'm going to switch to yet another instrument. I know what everybody is thinking, so I'm gonna jump right to it. The pound, elections, Brexit, excitement, and trading opportunity, of course, but with opportunity comes risk. I'm not the kind of guy who really likes to trade politics because you never know what happens, but I always take a look at the chart, even when the situation is political. If it's any kind of situation, the charts can help us a lot. So the first thing I want to do with the pound is to take a look at the daily chart. And I want to just skip the indicators here. I want to take a look. I'm gonna remove everything on the chart so we can start anew. One of the things that I'm really interested in is to see if this recovery attempt is very close to any retracement level that is of significance, like 71.4, and of course it is. 71.4, my favorite retracement level, my own retracement level that I gave my name to. I'm very proud of it. Very proud to discover a retracement level. But let's see where this is going to take us. Of course, this retracement at 29.75 looks very important. And as you can see, the market did try to break above it many times, many times. This is a daily chart, guys. So every candle is 1 day. So we tried to break above it here. The high was 90. Here, the high was 86. Here we pushed the furthest above it. High is 1330. Here, the high is 30. Again, here, absolute magic, 76, very close to it. Again, 73, extremely close to it. And then here, the high is 85. And then here, guys, 70. And then here it is 70 again. So it's obviously that we do have a very important resistance at the 71.4 retracement level at 29.75. This is without a doubt the resistance we need to care about for now. And I'm going to leave that piece of information on the chart. So resistance is definitely at 29.75, and I'm going to give it 5 stars. This is a very important resistance. But I'm going to change the color. Okay, now what about the support? What about the support? This rising trend line looks very good. Why? Because it's very close to the top of the moving average band. And we, of course, we have the bottom of the moving average band very close to 27, which is a retracement level for this last part. Let me show you what I mean. what I want you to see here is how close this 38.2 retracement level at 27.01, if you want to be really exact, to the bottom of the moving average band, and how close the top of the moving average band is to this trend line. This trend line is today, it's going to be at 28.38, something like that. But because this daily low is at 32, I'm gonna consider it to be at 32. Okay, so support 28.32, and as you can see, it's the same kind of problem we had with gold, and that is, of course, the difference between the support and resistance is not very small. It's more than 140 pips. So guys, with 140 pips between support and resistance, this area is a neutral area. We cannot tell which side is going to be the winner from this chart by itself, because as you can see, the price action is contracting, and when this happens, before a break above this trend line or below this trend line, things can go either way. That's why we are going to switch to the hourly chart and use some indicators, try to see what the market is saying. The first thing I note is, of course, the direction of the stochastics and the RSI after reaching over both levels. They are moving to the downside. This is weakness, but we are still above the moving average band, so it's not a total catastrophe. Again, to retracements, of course. Now, as you can see, between the 38.2 at 77 and the 50% at 66, we do have the moving average band. So another support that we need to care about is 28.66 to 67. I'm going to leave that on the chart for you. Support is also, we do have support at 28.66 to 77. Of course, as you can see, we are only 10 pips above the top of that area. We need to watch it, but the main support will continue to be 32. Actually, 32, it's the daily low here. Yes, this was a daily low. I'm going to go back to the daily chart to make sure I'm using the right daily low. This daily low, yesterday daily low, as you can see, the low is 32. Yes, so we are going to continue to depend on 32. How about resistance, guys? The resistance is, of course, if you try to draw a trend line from this top, let's see where that would lead us. Maybe like this. Yeah, that's better. So this trend line is currently running around 29. So resistance, let's call them initial support and initial resistance here. Initial support, initial resistance. 29. Out of these four levels, guys, my preferred ones are these. We're going to use support at 28.32 and resistance at 28.99 if you want to be exact. It's not, it's one pip below this one, right here. Let me see with this high. Yes, 28.99, one pip. Of course, it's not going to make a lot of difference. So we are going to use these support and resistance levels in order to build our trading strategy. And we're going to do it just like this. If we break above the resistance, we want to be long. So buy 10 pips above that, 29.09, and with a stop 10 pips below the support, 28.22, 81 pips. Yeah, it is still within what we are willing to accept. Target 1 and target 2. Target 1 is going to be, of course, another test of 29.75, the 71.4 retracement level that we are really interested in. And target 2 needs to be, of course, above that. I remember we do have a resistance at 30.77 from last week when we were analyzing. I remember this very well. I'm going to use that as my second target. And here's your first recommendation for today. Now, about the short, of course, we are going to use the opposite. If we start trading below 28.32, we want to be short. Sell at 28.32, sorry, 22, 10 pips below the support. Stop is going to be 10 pips above the resistance, 29.09. Now, with the targets, target 2 is going to be 27. I have shown you that this is an important retracement level. Okay, guys, so sell at 28.22, stop 29.09. Second target is going to be 27, but we still need to have ourselves a closer target than that. And this bottom right here, I have used this before. It's 27.67. $55 pips on target 1 and 122 pips on target 2. That makes sense. Here we have 66 pips on target 1 and 168 pips on target number 2. Very good recommendations in my own opinion. I'm looking forward to breaking one of the support or resistance levels that we are going to use today. Of course, guys, even while we are using these two, I really want you to keep your eyes on 29.75 for the time being. It's a resistance that proved its importance time and time again in the near past, and it's expected to continue to do so for the time being. With all the political stuff happening in the new UK, a break above this resistance could result in hundreds of pips to the upside, maybe to 32 or even beyond that. So we're talking about 200, maybe 300 pips as a target for breaking that resistance. In my own opinion, a break above 29.75 deserves a real chance. So I'm gonna, of course, if I see the price trade above 29.75, I'm gonna invest my money in a long position on the pound. Of course, if we do so, we are currently around 100 pips, 90 pips below that. But if we get closer to it during the time we have left for today's webinar, or maybe tomorrow, we are going to talk about the exact entry, stop, and target for trading a break above 29.75. It's a very important resistance. Keep your eyes on it. But for today, we are not gonna give a recommendation depending on that level, because we are still far from it. Maybe in the next hour or so, if we get closer to it, I'm gonna update my recommendations and give you a recommendation to trade a break above 29.75. But for the time being, these are the recommendations for today, guys. Buy at 29.09, stop at 28.22, target or initial target 29.75. This is the one I'm gonna use in my order when I place the order in a minute now. Not this one. And for the sell, I'm going to place an order to sell at 28.22, stop 29.09, and I'm going to use the initial target as well, 27.67. So in both cases, for today, I'm going to use the initial targets. And that, of course, with that, I go to my QTime FX trading account, and of course, I'm going to place the orders. So buy stop at, let me check the numbers again, 29.09, stop 28.22, and a limit at 29.75, and boom, place. This is your order, guys, so please, if you want to copy it, if you want to save it, screenshot, write it down, go directly to your QTime FX live account and place it there. I don't want you to be trading demo too long, guys. I know a lot of people like to, especially, of course, I'm talking about the beginners. A lot of beginners, they like to trade demo for a week after week after week, thinking that that will leave them understanding the market better. Of course, I'm in favor of trading demo accounts for a while, but don't let that get too long, okay? Don't waste your time on trading demo accounts for months and months. That's not the right way to do it. You need to trade demo, but keep it down to a couple of weeks, 2 weeks, 3 weeks maximum. That's it. There's nothing else to learn after that time from a demo account. What you need to do is that you need to open your real account with QTime FX and start feeling the real money, that real money feeling. Because I'm going to tell you a little secret, guys. When you are trading demo, you will not feel real market. We are trading demo just at the beginning, so you get used to the platform. You try a couple of strategies. You see with your own eye what's it like to close a winner, what's it like to close a loser, what's it like to hit a limit, what's it like to hit a stop, and that's it, guys. After that, you need to feel the feel of real money, because that is the only way that you are going to learn about the market. With demo account, when you are losing, you can say to yourself, well, guys, it's a demo account. It's okay. I'm going to leave this trade and see what happens. I'm not going to place a stop. I'm going to take a large position. If it makes profit, I'm going to tell my friends about it. If the account is closed, I'll just open another demo account. So that is not real market feeling. With the real market feeling, you should know that when you have money on the line, you cannot do that. You cannot say to yourself, well, I'll open another account if this account is blown away. So don't blow your money away on such trading mentalities. What you need to do is that you need to open a real account. Get used to the real market, the feel of the real market. And that can happen only, guys, with real money. When you have real money on the line, you have that feeling, oh my God, it's losing. Oh, what should I do? Should I close it here? Where's my stop? What can I do? And if it's winning, of course, oh my God, I'm making money. Should I close it here or should I wait for more? These questions with real money positions are real market experience. This is the experience I want you to have. That's why, guys, immediately contact us via Telegram, FX_EddieCast, and let's open an account for you, a real account with QTime FX, where you can trade fantastic spreads, zero commission, and get yourself a very generous bonus. So back to the market, guys. This is our first recommendation for today on the pound. We are buying at 29.09, stop 28.22, and our limit is 29.75. Now let's place the sell. Of course, it's going to be a reverse. So I want to be in with a short position at 28.22 with a stop at 29.09. And my target is going to be 76.27. 67, sorry, not 76. 67, 55 pips, and place. And there you go, guys. So this is it for the second hour. We have talked about gold and the pound. I'm going to try and squeeze three instruments in the last hour of today's webinar. So stay tuned. More trading opportunities ahead. One of them, of course, is the yen. We have been extremely interested in the dollar yen recently, and I'm gonna talk about that after the break. So don't miss that. Very important. Could be a very, very important trading opportunity on the dollar yen. We are waiting for something to happen. And if it does, we are going to get in this market and expect hundreds of pips of profit. Do you want to be in on that very interesting trading opportunity? Then meet me after the break. I'm going to take my second and last break of the day, a short break, guys, before we continue talking about the market. And before I go, I want to give a big, big thanks to our favorite broker in the whole world, QTime FX, who is sponsoring this live stream so you guys can get to know the trading opportunities in today's market. Okay, that is why they are offering you these videos. They say, Munther, please give our clients the best trading opportunities in the market. Show them where is the support, where is the resistance, where should they get in with a long, where should they get in with a short. And of course, we're going to pay you on their behalf. And that's very, very generous of QTime FX. They want you guys to know about the market. They want you to see these trading opportunities. So go back to them, show them some love in return because they love you. And I want you to love them too because they are offering you fantastic trading conditions, guys. If you're looking for a leverage of up to 500 to 1, we got that. If you are looking for the broker who got the award for the lowest Forex spread broker of 2018, we got that. If you are looking to trade the euro dollar and dollar yen with spreads that are less than half a pip, we got that. If you are looking for an account where you can trade with zero commission, we got that. If you are looking for a broker who has client funds segregated and UOB, which is ranked 22nd place in the World Bank ranking, we got that. And of course, if you want a bonus, just free money, we got that. Open a VIP account with QTime FX with a deposit of $150 or more and get up to $500 in free bonus. Make a deposit of $300 and you will be eligible for a bonus of $500, or you can only make a deposit very, very modest amount of $150 and you can get $250 in bonus. Of course, you need to trade in order to realize that bonus, and the rule for that is that you can withdraw equity equal to $1.50 for every lot you trade. But there's a very important note here, guys. To get the promotional benefits, you must contact us at fx_educast via Telegram. This is the gate that you need to get in through in order to get all these promotional benefits. So what are you waiting for? Contact the very professional, very friendly team at fx_educast using Telegram. If you have a Telegram, immediately contact us. If you don't, download it and get yourself a username and contact us at fx_educast via Telegram. And I promise you that you will find a professional and friendly team waiting to help you with smiles on their faces. With this, guys, we are going to take another short break, 5, 6, 7 minutes, something like that, and we will be back with more after that, especially the dollar yen. I really believe that there's a huge opportunity there and you don't want to miss that. So see you after the break. Okay, guys, we are back. We are back again. If you have just joined us, welcome to this live trading and analysis session with your host, Munther, Marji CMT, FX Educast, and of course, our favorite broker in the world, QTime FX. We have talked about euro, gold, and pound so far, and we still have 1 hour to look at other trading opportunities. And I'm going to use that hour, I'm going to use every minute of that hour to try and find you good trading opportunities for today. And we are going to start with what I really believe to be a very interesting situation at the dollar yen. So let's move to the dollar yen chart. And let's gonna remove all drawing tools. I don't want it to be confused with trading recommendations from last week left on the chart. So guys, first let me go to the daily chart. I want you to see something that is very important. Of course, guys, we have talked about this so many times, but for you and you guys, and just to remind everybody, we are going to see which is the most important resistance level for the time being. And in my own opinion, it is without a shadow of a doubt 109.37. So why am I saying that? Of course, you remember the infamous flash crash. This was an incident that happened during the Asian session, or around the time of the Asian session. I was sleeping at the time. I don't know the exact time it happened. It happened early this year when the price absolutely crashed. Of course, guys, after this flash crash, which took the price down hundreds of pips in a very, very short time before recovering, also in a very, very short time, the price recovered up to levels that are beyond 112. The high, which was seen late in April, was 1240. From there, we dropped very hard again, but not, of course, not with the same kind of speed. We dropped hard again towards 104, 45, almost 800 pips. But of course, that took 4 months. And after this drop, the price started recovering to the upside, of course, until it reached the 61.8 retracement level for the whole drop, from the highest price seen after the flash crash to the lowest price seen after the flash crash. And that, of course, a move of almost 800 pips, guys. That's a lot. That's why we are paying a lot of attention to this move. And we calculated the retracement levels, of course, for this move, only to find that 61.8 retracement level, the single most important Fibonacci retracement level, is at 109.37. Well, so what? 109.37, what's the big deal? Well, I just want you to take a look at what happened here. On the way down, when we were dropping from April top, we had a corrective pattern here. A fantastic corrective pattern. It looks amazing. Which terminated extremely close to 109.37. The actual high was 109.32. This was seen on the first day of August, immediately after the first rate cut on the dollar. The dollar from 109.30s collapsed, and as you can see, it took only 3 days to trade from above 109 to levels that are close to 105. So we're talking about a little less than 400 pips in that move in 3 days. Absolute collapse of the price came from the 109.30s. This is very important. Again, once we recovered from the bottom seen in August, we started recovering, of course. We continued to reach higher and higher and higher until we touched the 109.30s again, guys. So it is unbelievable how this number is showing itself to us on the chart. October 30th high was 109.29. Imagine that. November 5th high was 109.25. And then we actually tested this level on November 7th. The high was 109.49. The next day, the high was 109.48. And the next day, the high was at 26. And then again 30. And as you can see, many daily highs that are very close to the 109.30s, including August 1st magical high from which the price actually collapsed. It was the top of an ABC pattern, and as you can see, guys, all of these observations on the chart point to the importance of 109.37. Okay, now because we have started dropping away from 109.37, the bearish possibility is favored, and it will continue to be the favored scenario in the market for as long as we do not break above 109.37. Of course, that is the opinion that I have right now, but I need to admit something, and that is this drop, guys. The drop from 109.37 was not able to break below the moving average band. I want to see that happening. As you can see, we find support in the moving average band here, here, and that is not very bearish. So yeah, we failed to break above 109.37, but we found support where the bulls needed to find support, and that of course leaves us with a little bit of doubt regarding our bullish expectations. We want the price to move lower, but in order to have confidence or to restore confidence, we need the price to start trading below this moving average band. The bottom, or let me start with the top of this moving average band, is at 62. The bottom is currently around 30, 29, 30, something like that. So this support area is important. I want to see it broken to the downside. But the overall look of this recovery from August bottom with the top very close to the Fibonacci level looks corrective, and that by itself is a good thing for the bears. However, we need to see, of course, more bearish action to the downside. Now I'm gonna try and find the closer support and resistance levels, guys. So guys, when we go to the hourly chart, we can see that the rising trend line from last week low is currently running just below the moving average band on the hourly chart. Of course, I'm talking about it, and it is slowly approaching the lows that we have seen yesterday during the Asian session and Euro American session at 78. 108.78 obviously looks like support that we need to care about. We can push this a little bit higher towards 80, but that's it. So I'm going to use 80. As you can see, 80 is now very, very close to the bottom of the moving average band. So I'm going to use the support at 80. I'm going to use the support at 80. For the resistance, I'm not going to change my mind one bit. It's 109.37. I'm going to use these levels to build a trading strategy. Okay, it's very easy when you have 50 or 60 pips between the support and resistance. That would leave us, of course, with a trading recommendation or a couple of recommendations that are looking very good from a risk management point of view. The stop will not be very large. That's why, guys, I'm going to start immediately building my trading strategy. I'm going to start with my favorite 108.70. My favorite, of course, on this pair is the short, but of course, I don't get married to trades. I don't get married to directions or setups or whatever it is. You need to look for what is good for you. If the long position is what is expected to make you money, you need to go long. If an hour after that you reach a conclusion that the short position is the one that is going to make you money, you immediately forget about building a long position and go short. We are traders, guys. We are never the kind of people who want to stick with the same direction no matter what the chart is saying. If the chart is supporting a rising trend or a potential that the price is going to rise and make us money with a long position, then we continue to be long. But if that same chart shows us that something has changed, we need to follow the change. We need to adapt to new information on the chart. And in my own opinion, the only thing that can shake my bearish expectations on the dollar yen is a break above 109.37 with a good number of pips. And for that, I'm going to use, how about 30? Recently, I've been using 20, but I'm going to increase that a little bit. And for that, of course, you know what? I'm gonna take some kind of risk here because I really believe in the direction to the downside. The first pip below 108.80 is going to be a shorting recommendation for me. Okay, guys. So once we start trading below this moving average, the first pip below it, we are going to go short. And of course, this is an hourly chart. And as you can see, the moving average is moving to the upside, of course, because the price itself is moving to the upside. That means that in the next few hours, of course, this moving average is expected to move a little bit higher. So it's going to be 81, 82, 83, something like that. So I'm going to place my short at 108.79. My stop is at 109.67, 88 pips. That is a little bit more than I want. So I'm going to cut that with 5 pips. So instead of 67, I'm going to keep it at 62. 83 pips. Well, okay. Now, what about the targets? Target 1 and target 2. Target 2 is going to be very, very huge because we are expecting a collapse on this. pair, with one condition, of course, not to break above 109.37. This is my view for as long as we are trading below 109.37. I expect this pair to really suffer, to go through some period of real suffering and dropping. But in case a surprise happens and we start trading above 109.37, then I will completely forget about this expectation. You see, guys, you need to keep yourself ready to react to what the market is telling you. The market is currently telling me this is a shortable market. A sell could make you a very, very good profit. But there's a condition. This market needs to trade below 109.37 all the time. I don't want to see the price above this level. But if the price is above 109.37, then that's it. I need to let go of my bullish expectations. Oh, sorry, bearish expectations. I'm sorry about that, guys. So, and become bullish, of course. Now, the initial target for a short at 108.79, let's look into that. How about this bottom here, which is 108.25, not bad at all. 108.25, that's 54 pips. But the second target, guys, I have talked about this last week, is going to be a monster of a target. Why is that? I'm going to show you on the daily chart why I really believe that this market could really, really drop. And I don't mean 50 pips or 100 pips. Guys, when the market is falling and then we have a corrective pattern like this one terminating very close to an important resistance, especially when that resistance is a retracement level, a key retracement level, like the 61.8 retracement level here, which proved itself here previously, like this beautiful drop here, and again it was tested here, but the market could not break above it. All of these things indicate that we have a corrective pattern to the upside, which terminated very close to a Fibonacci level. And when a correction terminates very close to a retracement, that means we should be brave enough to target levels that are beyond the starting point of this corrective pattern. In our case, we started here, guys. The low of August 26th was 104.45. So if we are right about this one, and this is only a correction, then we should see the price trade, at least test, and most probably trade above the bottom of this day here, the bottom from which the correction started, which is 104.45. So a little bit below that, 104 is going to be my target for the time being. Okay, now what if I'm wrong? What if the market is going to move to the upside? Can that happen, guys? Do you think that can happen? Can I be wrong? Can you be wrong? Can Warren Buffett be wrong? Of course, everybody can be wrong. This is a market, it can move in any direction it wants, up, down, sideways, in circles. It is free to do whatever it wants. So don't think that you are immune to market movements that are way, way beyond what you expect, or completely in the other direction of your expectations. That can happen anytime, any minute, any day, with or without fundamental reasons. It can only happen by supply and demand. It can only happen by, just regular trading in the market, or maybe because of a central bank decision, a very important figure coming out, a surprise on the political scene. Anything can do that. So of course we can be wrong. And we know that we are wrong when the price starts trading above 109.37 with a good number of pips, not 3 or 4 or 5 pips. I'm on this situation. I am decided on 25 pips right now. I really believe that 25 pips above 109.37 is enough to convince me that this level is broken. Now my stop is going to be definitely below this trend line And by that time, of course, this trend line is rising. We need until later today to reach 80, which is of course important because of these lows and because of the moving average. So I'm going to use the same thing here, 108.79. Initial target for this break. I'm going to show you my targets and why I'm going to use them in a little bit after I introduce them to you. 10.13, that is 51 pips. Yeah, that's okay. And 12.40, and I'm going to show you why these are my targets. So this is the 61.8 retracement level, right guys? Now the next level that I really care about is 71.4. Of course, 66.6, which is, or 0.7 or 67%, calculated in any way you like. It's the 2/3 retracement level suggested by the father of modern technical analysis, Charles Henry Dow. Of course, it's very important, but to me, once we start trading above 61.8, I immediately focus on 71.4. So 71.4 is at 10.13. That's why 10.13 is my initial target for today. And if we continue it moving to the upside, of course, beyond the 71.4, then there will be a good chance of testing the top from which this whole drop started, because we are breaking one retracement level after the other. 50%, 61.8, 71.4. That means there is actual strength in the market, enough to reach. Once we break the 71.4, for me personally, I start anticipating a test of the previous top from which the whole retracement calculations were made. So 12.40, this top here is my second target. This retracement level is my initial target. And these are the recommendations for today. I'm going to go to my live QTime FX account. I'm going to place both of them. Yes, guys, both of them. Although I am very excited about the bearish possibility, I'm not going to place only the bearish possibility. I'm going to put them both on my trading account. My stop is going to be 109.62, and my limit is going, I think we said 25, right? Let me check. Yes, 25, 54 pips of profit with a stop that that is above 109.37. I don't want you to place any stop, guys, that is below 109.37. We can sell at 79. The market goes up to 109.10, 15. It can happen, of course. It can happen. I don't expect that, but of course it can happen. But as long as 109.37 is not broken, I don't want to close this position. So that's why I'm keeping my stop at 109.62. And boom, and placed, guys. So we have an order to get in the market, a sell at 108.79 with a stop at 109.62 and a limit at 108.25. Now, what about the backup plan? I do not expect the market to break above 109.37, but of course that can happen. Surprises happen in the market all the time. So my stop here is of course going to be 108.79, and my limit is the next retracement level, 10.30. And please, and there you go, guys. This is your recommendation for now. Buy at 109.62, stop loss 108.79, and limit at 10.30. Okay, so that's it for the yen. Now, guys, let me take a look at your I just want to say hi to you guys. Vlog, uh, Angeline. I hope I'm saying that right. And our friend Gabrielle. How are you, Gabrielle? Welcome back. Welcome back, everybody. Everybody is, of course, interested in the offer that we are talking about. The bonus, the very attractive spreads, no commission, and it's all coming to you from QTime FX through FX Educast. So please contact us at FX Educast via Telegram, FX_Educast via Telegram, or you can use the WhatsApp at this number 82 010 84 81 36 35. The number again is 82 010 84 81 36 35. This is your WhatsApp number. Gabrielle, yes, you are my number one fan, and I'm very happy to have you with me. Okay. So guys, before we move to the next instrument, what I want to say here is that, as you can see, guys, we have seen 109.20 during the agent session, and now we are dropping, which is very good. Now, what I want to see is trading below this level here, the 80, and then we are in. Currently, we are almost 10 pips above the entry level for our short position, our order to sell the dollar yen. So keep your eyes on this one. Okay, guys, to the next instrument. And today I was thinking of talking about something that we do not usually talk about. And it is crude. I remember many weeks ago we used to talk about crude oil on a regular basis, but unfortunately recently we have been focusing on the instruments, other instruments, of course, currencies. And who can blame us? Currency market is on fire with the dollar rate cuts and everything that is happening in the trade war. Everybody wants to be a part of the currency market. But why not take a look at crude oil and see if there is any opportunities there? To tell you the truth, I am a crude oil addict. I love trading this contract, the futures. I love it. But recently, I have stopped, and I'm going to tell you the story of why. I was trading this thing, making money every day. Or most of the time. Nobody makes money every day, but most of the time I was very happy about this trading, making money here, there, with the short, with the long, with, of course, occasional stop losses hitting. That, of course, nobody can escape that. But overall, I was very happy with trading this thing up until this happened, guys. It was, well, I started my career as a trader in December of 2000. That is next month. That is going to be exactly 19 years. And in 19 years, guys, I have never, ever seen a gap this large. Never. I remember I had a long position here, I swear to you. And I closed it with a modest profit here before the market closed on Friday. The close on Friday was 54.85, and we came on Sunday evening, my time, of course, Monday morning if you are in Asia, Sunday evening if you are in USA. We came to see where the market is going to open. Why? Because over the weekend, oil facilities in Saudi Arabia were hit with a drone attack, and huge fires took place. We all saw that on TV. So when I was watching that on Sunday, I said to myself, well, I gotta see where the market's going to open. This is going to be crazy. Oil facilities are hit, and this is oil market. Oil facilities in one of the three biggest producing countries in the world. For a while, Saudi Arabia was the number one producer of oil in the world, but not right now. It's still one of the top three, and I think, of course, it's going to continue to be one of the top three for a very, very long time. So when the oil facilities of one of the three biggest producers in the world for oil is hit with drone attacks, that is very, very serious. So remember, guys, 54.85, right? We closed Friday on 54.85, only to open, guys, at 61.48. Absolutely the biggest, largest gap that I have seen in my life. On the broker prices, the difference was between the closing and the opening. It was 678 pips. And to say that number, a gap of 678 pips, sometimes over a whole month. A lot of instruments do not move 678 pips over a whole month, sometimes 2 months, and you are not moving 678 pips. That happened between the closing of a week and the opening of the next week. So honestly, I was trading this thing all the time here. But when I saw this, I said to myself, I got to give it some time. I'm not touching this for a week, 2 weeks, 3 weeks, something like that. Later, I will be back. But for now, I just want to see what is going to happen. And are we going to restore confidence that the oil facilities in Saudi Arabia are safe from attacks? Or are we going to be under the danger that they are they can be attacked any minute, any day, any time? So, of course, I said to myself, no, I'm not trading this thing. A lot of people said, well, maybe there's a trading opportunity here. It's going to 100 or it's going to 50. Everybody had their own opinion, but I stayed out of the market. And I said to myself, well, okay, 1 week, 2 weeks, and I will be back. But unfortunately, I was never back. So now, with you guys, I am here again today looking for some market action. And the first thing I note is this: the stochastic is about to issue a short recommendation or signal. It's not a recommendation. The second thing I can see here is the unbelievable accuracy of this rising recovery attempt at the 61.8 retracement level. As you can see, guys, the 61.8 Fibonacci retracement level is at 58.65. Let's see what is the actual high of recent times. It's 74 here and 67 here. 74, guys. So that is what, 9 pips above the Fibonacci level. And of course, oil is a volatile instrument. Sometimes it moves 200, 300 pips in one day. So 7, it's not a lot of difference. It's actually very, very close to the Fibonacci level. You know me, I keep my analysis simple. I use simple tools like trend lines. You don't need a very complex system in order to generate your trading signals. I think this trend line is not very bad at all. It's not bad at all, and the reason for that is that the moving average band and the trend line are getting closer and closer to each other. The trend line itself is at 55. So if we only drop to test this trend line, guys, not break it, just to test it, in the next few days, of course, it's a rising trend line. It's going to go up a little bit every day. So something like 3-4 days from now, it's going to be around 55.50. And now we are very close to 58. So we are talking about a potential of 250 pips to the downside if we are correct in understanding this failure to break above a Fibonacci level as a weakness sign. And as said, guys, this is a daily chart, and the stochastic is about to generate a trading signal, a short trading signal to the downside, as you can see. So we do have reasons to believe that this market is weak against 58.65. So the first thing I want you to keep in mind is that resistance 58.65, and it's an important one. Let me color this in black. Okay, support, of course, the support is here, but we can find closer support levels. This is very far from current market. That's why I'm switching to the hourly chart, and I want to see the indicators. The indicators are already showing weakness here. I'm talking about stochastics, just a little bit of time inside the overbought area, and from there we are falling to the downside. The direction of the stochastic by itself and the direction of the RSI are both signs of weakness. So let's go back to the price itself and look for a closer support. Nope. Yes, this is it. This is what I was looking for. The 38.2 retracement level for this move to the upside, which I think it can be counted as 5 to the upside, and that is not very bearish. That's not very bearish, guys. Still, of course, if we break support, we can follow that break now. This can be also counted as an ABC. A, B, C, D, E, exactly. 5 waves inside what looks like a triangle. Wave B, I'm going to show you what I'm talking about here. This is what we call triangle and Elliott wave, when 5 waves are getting smaller and smaller in size in the place of a corrective wave like B wave or wave 4. And after that there's a C to the downside. This is not, to tell you the truth, guys, this is not very bearish. But in case, of course, if we start trading below the bottom of wave C, that will become bearish. So we can count this as wave X probably, or wave 1, 1, 2. It is actually, I was excited about the bearish possibility before looking at the hourly chart, and when I did, no, I see things are changing here. So we have evidence on the daily chart of weakness, but on the hourly chart we do not have that. It's not very obvious. On the contrary, finding support at a Fibonacci level like here with this kind of accuracy is bullish. 5 waves to the upside and 3 waves to the downside, including a triangle to confirm the correction, is not bearish, guys. So that is why we are going to wait. I'm not gonna recommend anything on crude oil for today, but the thing that I really want to keep in mind is that we do have a key resistance at 58.6. I'm going to leave these on formations here until tomorrow. So we have a resistance at 58.65, 58.65, while we do have a support at 57.25. They are already 140 pips apart. So even if we want to try and build a trading strategy around current levels, the stop is going to be massive. So this is another reason to wait. For today, I'm not going to recommend anything, but I'm definitely going to take a look at this tomorrow and look for evidence in one direction or the other. And I really hope that tomorrow I'm going to get back to you with a trading, at least two trading recommendations, maybe more, because sometimes I give 3. So let's not waste time here, because we are not going to initiate trading positions on the crude oil for today. We can jump to another instrument that is very interesting, and it's not only interesting, it can be very helpful in our euro dollar and dollar yen analysis. So on these fronts, we expect the euro to start moving to the upside, the yen to the downside. Of course, on both of them we are expecting the same direction, the direction of dollar weakness, but the chart is supporting a massive move on the dollar yen to the downside. That means if I have to pick among the 3 currencies, dollar, euro, yen, which one do I expect to be the strongest for the near future? On the near term, it's definitely going to be the yen, with one condition, of course, not to break above 109.37. As long as the dollar yen does not break above 109.37, guys, my favorite currency among these 3 major, the most important 3 currencies in the world, is definitely the yen. I expect the yen to achieve serious gains. And that means, of course, the dollar yen is expected to fall. Now, when we look at the euro yen, we can get ourselves some more information that can be helpful in understanding what is going to happen to the euro dollar and to the dollar yen. That's why the last thing I'm going to do today before the end of this webinar is to take a look at the dollar yen. Sorry, at the euro yen. And that is the first thing I note here is this. Let me delete this. I'm going to delete everything that's not really important, but I'm going to leave you with this thing. Yes. So guys, you can see that after very impressive moves to the upside, we stopped almost exactly. Let me adjust this to be accurate. Yes, this is the accuracy I'm looking for. We moved from around 117 early in October to 121 and beyond later in the same month. And again, we tested this level again in the last hours of trading of last month. So we tried to break above 2150, 40s, 50. I'm going to check which is the level exactly in just a minute. But we tried twice, or maybe actually, if you want to be specific, we tried more than that. Here's a first attempt, a second, a third, and a fourth attempt, and maybe even this one is a 5th attempt. As you can see, the price did stop several times between 30 and 50. So we can say that we do have resistance between 30 and 50, between this level here and this level here. This is a resistance area. Okay. 1, 2, 3, 4, 5, 6, maybe 7. Yes, there are 2 days, 30 and 31st. 8 daily highs, guys, between 2130 and 2150. Obviously, we do have resistance here. while we are talking about the market, a lot of you guys are asking questions about our broker and our very interesting offer to trade with very tight spreads, zero commission, and a very generous bonus. A lot of you are asking, and the guys with FX Educast are answering these questions. Thank you, FX Educast team. They are giving fantastic answers, of course, all the information you need to know about this offer, because we want you to take the money. Please take the money, get the bonus, withdraw $500 and spend them in any way you like. Enjoy them, because we're going to be happy for you when you do. Okay, guys, so thank you, FX Educast team, for being professional and friendly to everybody on the chat, answering questions about the account itself, the bonus, everything. Please, guys, whatever you have on your mind, any question, anything at all, you can shoot on the chat, and I see a very active chat, because our team, FX Educast team, is a professional, and they want to give you all the information you need, so you open your account feeling very good about it, feeling great about the spreads, the zero commission thing, and of course the bonus. For me, of course, I'm going to focus on the market and leave the account issues to you guys, my lovely team at FX Educast. So guys, with this failure here, of course, it was definitely going to move to the downside. 1, 2, 3, 4, 5 failures. That is our weakness side, and it started falling as expected. Now, when that happens, we always calculate retracement levels to see which one of them is likely to provide support for the instrument we are studying. And when we find that the 50% level is at 1926, and this bottom here, which November 14th of all days, just like the low on the euro, of course, because this is another euro pair, it was 23. My God, guys. So 26 and 23. We're talking about 3 pips below the 50% level, and then boom, look at this beautiful baby here. Look at this unbelievable move to the upside. Beautiful, fast, sharp, very satisfying, making more than 100 pips of profit in a matter of hours. Actually, it is around 135, 140, something like that. Or actually 145, if we want to be exact. So a very good reaction to the 50% level. When this happens, guys, that is not bearish. When we find support at retracement levels, that is not bearish. Especially that we can count this here. Sorry about that. One, two. Who here uses Elliott waves? Let me know. Do you know what is the meaning of a 5-wave sequence? It means that the direction of the market is in the direction of that 5-wave sequence. This is the main direction in the market. So when we see 5 to the upside, that means we favor the upside, not the downside. And of course, with the top, with the bottom, very close to the 50% retracement level, absolute magic here. 3 pips, then boom. That is another reason to believe in the upside. Now, another reason, my God, guys. Another reason, I'm going to use the 71, sorry, not the. Another reason, guys, to believe that the market is going higher is this unbelievable accuracy at the 71.4 retracement at 1965. The low, the actual low was 63. I cannot take this. 2 pips, guys. This is absolute magic. This is not an analysis tool. This is magic. 71.4 retracement level, my own retracement level that I have discovered and I really, really love. It's successfully provided support here. From that support, the market moved to the upside again. So I'm going to use this support as an indication of strength or weakness. As long as we are above 1965, I am going to favor the long side. And that is exactly, guys, the opposite to what I was coming to this chart looking for. I said to myself, well, the yen could collapse against the dollar yen could collapse, and that means, of course, the yen is going to soar against the dollar. So I expected the same thing against the euro, but nope. The euro does not look very weak in front of the yen at the moment. And these bottoms here at Fibonacci levels and this wave count to the upside, 5 wave sequence to the upside, all point higher. So this is our support. We are going to hold the bullish bias as long as we do not break below 1965. So our support is going to be 1965. Support 1965. How about resistance, guys? Well, we also have, this is a bit confusing. We also have a 3-wave sequence to the upside. So that's a bit confusing because we shouldn't have 3s and 5s pointing in the same direction unless something has changed here after the termination of the 5-wave sequence. One thing that I'm really interested in is to see where this C wave, this supposed C wave, topped. And that is unbelievable. It's 71.4. This is a bit interesting. It's very interesting. It's not a bit interesting. This is very, very interesting. So I'm going to use this retracement here as my resistance for now. 2025 support is 1965. So guys, support is 1965 while resistance is at 2025. A very exciting situation we have here where the bulls and the bears are really, really fighting to win this thing. And my own opinion is these are the 2 most important levels for the short term. Once one of them gives way, the market will become expected to move in the direction of that break. Okay, so I'm going to build my trading strategy depending on this information. Support. So I'm going to sell 10 pips below the support, 119.55, with a stop 10 pips above the resistance, stop at 20.35. And that is 80 pips. Okay, 80 pips, that's reasonable. Let me change the color. I'm going to use another chart to take a look at. Whoa, this is again very bearish. Yeah, this goes along well with my dollar yen expectations. Now we need to break below this. If we fail, of course, at the resistance, we are going to break below the previous bottom, 1925, definitely below that. And that, of course, gives us a chance to test this trend line, which is probably going to be, it's currently exactly at 85. 1885. I'm going to use that for today. So target. I'm going to give one target for now because we are running out of time and we don't have the long-term analysis done yet. So this is going to consume a lot of time to specify another target. I don't want to waste time on that because actually we do not have much time left. Now, what about the long? We have a buy at 2035, stop at 1955. Now, what about the limit or target? One target. I'm going to give you one target now, and I want it to be not very far. So if we start trading above here, we can easily retest this here, which is 1269. No, that's very, very close. Actually, the previous top, the top of the wave, 5-wave sequence, of course, when finding support at a retracement level and start recovering, we should be able to trade above this one. And this high here is 69, 2069. So I want to place it just a little bit above that. I'm going to look for if I have support or resistance above that. We can place this at this top here, which is 2111. I'm gonna, of course, place these orders on my QTimeFX account. Euro-yen. Sell at 1955. So stop. $19.55. My stop is going to be $20.35, guys. And my limit is going to be $18.85. And place, as you can see, guys, this is the order for now. Sell at 19.55, stop 20.35, limit 18.85. The long, of course, is going to be the opposite to that. We are going to buy at 20.35 with a stop at 19.55, 19.55, and a limit at 21.11. And place. And let's hope for the best. We have two orders now on the Euro-yen, a long and a short. The long is at 20.35, stop 19.55, and a limit at 21.11. And with this, guys, we come to the end of today's trading and analysis session. Thank you very much for being here. It is always a pleasure to meet with you guys, my fellow traders, my people, my tribe. I love traders, you know that. I love talking to traders. I love spending time with traders. And I love you guys to be here every day. I want to talk to you. I want to have any kind of discussion that you want to have about any market. As long as it's trading, I'm in. You want to talk currencies, you want to talk oil, you want to talk indices, anything you have in mind, I will be here to talk about it. So let's meet again 21 hours from now, tomorrow at the same time we started at today, 21 hours. And during these 21 hours, I want you to keep your eye on the market. We specified the important support and resistance levels for a number of instruments, and I want you to take that with you. If you are trading any of the instruments that we have talked about, please pay attention to the support and resistance levels indicated in our analysis session, and I promise you that you will not be disappointed. I have tried my best to give you the most important levels for today, and I really hope they will be helpful in your trading. I wish you the best, and I'm going to use these levels in my trading today. Obviously, we have placed orders already, and I'm going to wait to see which orders are going to be hit, which are not. As always, guys, I want to remind you, I cancel the orders that were not hit by the end of the European session. So that would be around 7.5 hours from now. I'll keep my orders up until that time. If some of them are hit, then they are hit. We have the stop, we have the limit, and we hope for the best. Fingers crossed. If some of them, and of course some of them will not be hit, we go back to our trading platform, our QTimeFX account, and we cancel the orders that were not hit around 7.5 hours from now. Okay, guys? So enjoy your trading. Wish you the best. I always do. You know me. You know I love to see you talk about profit, guys. Especially, of course, I always want you to make a profit. I'm not selfish, but I love it especially when you use my recommendations and you come the next day and you tell me, Munther, I made this much profit because of your recommendation. That makes me the happiest man in the world, because I really want to help people who need help. Of course, some of you are professional. They don't need help. They can make their own trading recommendations, but some are still learning this thing. Beginners looking for someone with more experience to help them at the beginning, at least. And I'm here to do just that. Love you all. Have a fantastic day ahead. And as I always sign off, good trading and good luck. And before I go, a big thank you to QTimeFX, our favorite broker in the whole world. This live stream was sponsored by QTimeFX. Tomorrow's stream will be sponsored by QTimeFX, and every day we are going to meet here because QTimeFX is generous enough to pay me on your behalf, guys, so you know about the best levels in the market, the best trading opportunities in the market, and you use that to make some money, because QTimeFX wants you to make money. They want you to be successful. And that's why they are offering you a maximum leverage of 500 to 1. Because they are offering you fantastic spreads, they got the award for the lowest forex spread broker of 2018 by the ACIFMA. Imagine yourself trading with only 0.4 of a pip on the euro dollar and the dollar yen, and similar spreads on all other instruments, all major instruments, with zero commission. Of course, guys, when you look around on the internet, you're going to find a number of brokers offering less than 1 pip on the euro, less than half a pip on the euro, on the yen, on these major pairs. But unfortunately, a lot of them ask for commission instead, because they are offering you great spreads. They say, well, we are offering you great service, so you need to pay us for that, some commission. No, not QTimeFX. We do not do things like this here. We do things in a way that will make it easier for you guys to achieve profit. We want you to achieve profit. That's why we give you these spreads, but we do not charge you any commission. Very easy, right, guys? Very good trading conditions. And to make you feel safe about your funds, we assure you that our client funds are segregated in UOB, which is ranked in the 22nd place in the World Bank ranking. Now, to top that, we have, of course, our current promotion, which is doing very well. Every day people are opening an account because of this promotion. Every day people are asking us tons of questions about this promotion. Open a VIP account with QTimeFX with a minimum of $150 and get yourself a bonus of up to $500. This is not trading credit, guys. This is real green money. Okay, $500 that you can withdraw and spend in any way you like. The missus will be looking forward to take this money from you and tell you, let's do this, let's do that, and she will be very happy. So make her happy, okay, with the $500 that we are offering you and bonus right now. Make a deposit of $150 and you will get a bonus of $250, or make a deposit of $300 or more and you will get $500 in bonus. Okay, guys, and of course you need to trade before you can withdraw the bonus. So you can withdraw equity equal to $1.50 for every lot you trade, and you accumulate the number of lots you are trading, and after that you of course you can withdraw the money. So you can use this offer by contacting us at fx_educast via Telegram. You have to go through us, guys, in order to get these promotional benefits. You must contact fx_educast via Telegram. With this, guys, I really wish you the best. I want to see you again tomorrow. I will be very happy to meet you in 21 hours from now. So come back tomorrow and let's discuss more trading opportunities. I promise you, I will do my best to find you the best trading opportunities tomorrow. Okay, guys, this is me, Munther Marji with FX Educast and QTime FX signing out, signing off, saying goodbye. And until we meet again tomorrow, have a pleasant day, evening, morning, whatever it is where you live, and good trading and good luck.